Good afternoon and welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Well, we did have a listless start to the final trading week of 2025, but the sell-off has kind of, I wouldn't really call it a sell-off. The weakness, so to say, has kind of worsened a bit. In fact, the Nifty has fallen below that 26,000 mark. We're not even being able to defend that 25,950 mark. So yes, we would have liked to see a flattish kind of screen. That was still okay, given the fact that it is year end, volumes are thin, and trading action is kind of subdued, so to say. But one would be disappointed with the kind of move that we have seen in the market today, especially after after we had a good week of gains last week. But the pain is of course more pronounced when it comes to the broader end of the markets. Look at the market breadth, that's fairly poor. It was 2:5, so to say, the NSE advanced decline ratio. So yes, the mood is pretty somber as we have just about 2 more sessions to go for 2025 to end. 100-point cut on the Nifty, the mid-cap index down 0.5%, the bank Nifty as well trading with a negative bias. Most of the sectors have turned negative. In fact, metals have been fairly volatile today. Saw a good 2% move on the metal index in the morning, but it has reversed course as global prices have seen a fair bit of correction. Barring the PSU bank index, most of the other sectors are now trading in the red. But of course, lots to talk about. Let's bring on board our first guest. Then joining me is Vikas Gupta, CEO and Chief Investment Strategist at Omni Science Capital. Vikas, lovely chatting with you. First and foremost, we are ending the year with okayish that kind of gains on the headline index, right? 9 to 10% kind of gains on the Nifty. Given the kind of year we've had, how would you feel about that? Also, if you compare it with Asian peers or US peers, we have grossly underperformed. Look at Kospi, up 70% on a year-to-date basis. Even China, Hong Kong, Nikkei, despite the fact that inflation is inching up there, we've had a rate hike there as well. The index, the equity market have done fairly well. In Japan as well. So how would you be feeling with a 9 to 10% kind of gain on the headline index for the year? And for 2026, would you expect us to take the lead, and reverse the course?
Well, so we have to account for the very high valuations last year, right? So I'm actually happy that whatever returns we have, that is actually quite decent given the starting valuations at the start of the year. So from that point, we would have been most likely be in negative territory, but at least we are doing well. Comparatively, again, the gains in the other markets is again because of the lower starting valuations. And Japan is a special case where actually inflation being going up, and that adds to the revenue growth and earnings growth. And so despite the interest rates being increased, the growth is what is driving them into higher territory, right? And the impact of the multiple is not so much. While for India, we think going forward next year now, again, the valuations are not very low per se, but the earnings growth should kick in for the Indian markets and we should see a decent performance.
Okay, we should see a decent performance, although valuations are not really cheap even now. But in the middle we were talking about the fact that as FIIs look to diversify away from the AI trade, we were talking about the fact that India could emerge as an anti-AI play. But would you say that concerns over the AI bubble bursting were overstated, and could India still emerge as an anti-AI play even though valuations may not be as cheap? But after the kind of year we've had, after the kind of correction we've seen, at least are we inching towards that comfortable valuation zone? And in that sense, do you expect FIs to come back?
Yeah, so see, valuation wise on the headline level, as I mentioned, it's overvalued or fairly valued. But like our just we came out with the Market Outlook 26 report. So in that, nearly 30%, 30 to 35% of even the large caps are fairly or undervalued. So if there is a choice, if the FIIs or even DIIs focus on those undervalued pockets, then there is a large enough place, large enough market cap and liquidity where large amount of capital from FIIs, etc., can be accommodated. and that could drive the market. So even though the headline might not move the index, there is a lot of inflow which can come into those.
Okay, all right, got your point. But where are you when it comes to the large cap versus mid cap versus small cap, investment thesis? In small caps, of course, have not had a great year. We have seen uneven returns when it comes to Indian markets this year. On the headline level, we've been talking about 10%. On the mid caps, it's been even less, 5%. On the small caps, you've seen negative 5 to 6% kind of returns. So how does one really position their portfolios going forward? More of large caps, less of small caps? How would you look at it?
No, so we believe in that you should actually be agnostic to the cap size and focus more on the degree of undervaluation, right? And there you will find that, as I mentioned, there's enough in large caps itself, 30-35%. Same is true for mid caps, slightly lesser, maybe 30% of the stocks are undervalued or fairly valued. And in small caps, again, there is 35%. But that is the percentage wise. When you look at number of stocks wise, majority except the top 250, everything else is small cap. So there is very large number, about 400, 500 stocks in small caps, which are significantly undervalued
Yeah.
and which have good growth rates. So I would position the portfolio to have a mix of all of them. Like wherever you find value, you have it, rather than just saying, okay, I'll have a small cap portfolio or I'll just have a large cap portfolio. No?
All right, a mix of all three, because we are kind of running out of time, but I would, like to understand your thoughts on Coforge's acquisition of Encora. Is it a smart long-term AI bet, or is the market getting ahead of itself on AI-led growth? Experts have retained their faith in the stock. They say that the valuations are looking fairly comfortable. But what have you made of this acquisition? Do you think it will be EPS accretive from FY27, FY28? How would you look at it? And most of the experts are also pretty skeptical and say that a lot depends on execution. What's your reading?
No, see, there is no option. I mean, Indian IT companies have to get into the AI play, right? And it is going to be a big thing. Uh, Without acquisitions as well, the Indian IT companies are preparing themselves for providing AI related services going forward. So it's not something new. It just makes it faster. So it's not only that I wouldn't say that it's anything wrong, it's perfectly the right thing to do by Coforge. And we should probably see other IT companies trying to do the same thing, which means that quickly acquire expertise and client relationships and technology with acquisitions. So I think it's perfectly the correct thing to do strategically.
Okay, correct thing to do strategically. So yes, we'll see how that really pans out for the company. But last question really, and I'm really sorry to cut short our conversation. There were some technical glitches, so that's why we couldn't start the show really on time. But we've seen a kind of renewed buying interest in railway stocks, and of course we have a budget coming up on the 1st of February. And previous data shows that whenever railway stocks start performing ahead of budget, that's more of structural than seasonal. Do you agree this has become a repeatable trade? And would you look at some of these railway stocks? Although today's corrections are pretty sharp, but if you look at the last 1 month, the returns for some of these stocks like IRFC, RVNL, IRCTC, they're all positive, 8 or 10% if I'm not mistaken. So is it a good time to take a positional bet on some of these names?
Yeah, from a long-term perspective, right? I mean, so we are expecting that the budget will increase allocations to the railways. And as that happens, the orders will start coming to these most of these companies, right? And so the order books will become even bigger, which are already quite decent, right? I mean, the order books are not small at all, and some of
Yeah.
them are fairly valued, some of them are at a discount, and we would prefer taking those which are at a discount, right?
All right. Okay. For the long term, of course, pick up stocks that are fairly valued and looking great, at discounted prices. Because lastly, top three themes for 2026, and what's the allocation like when it comes to gold versus silver? I mean, it's a long conversation there as well, but due to paucity of time, I would like to get your answer to these two questions.
Yeah, so on the sector wise, we love the PSU banks absolutely at number one. Number two is the private banks, and number three is the power sector. Okay, And if something
Okay.
more, then of course the railways and defense and services sector, infrastructure. On the gold and silver, we would be very, very skeptical and play it cautiously and not more than 5% each. And that's the max we would be comfortable with.
Okay, not more than 5% each for gold and silver. With that, Vikas, would like to thank you for taking our time and joining in. Wish we could have a longer conversation, but if not in 2025, of course, definitely looking forward to a longer conversation in 2026. Wish you a very, very happy new year in advance.
Wish the same to you and the audience. Thank you.
Thanks a lot. Thank you, Vikas. Well, that was Vikas with his thoughts on the market and the sectors to watch out for and the kind of allocations one should have in gold and silver in their portfolios as we approach 2026. But take a look at the markets before we bring on board our technical guest for today. We are round about the 25,950 mark. 26,000 of course being broken on the downside. Conviction is lacking, and there is no direction that's emerging at the current juncture. Two more sessions to go after today. For 2025 to end, but looks like more than a Santa rally, it's the year-end blues that has gripped the bull, so to say. In terms of the individual movers, let's just take a look at some of the names that are doing well. Tata Steel, Tata Consumer, they are the top performers on the Nifty 50. Asian Paints is a close among the top three gainers as well. Some of these consumption names in fact are doing well. Look at Nestle as well. That's also among the top Nifty gainers. Eternal is having a good day today, and Swiggy was also upbeat in the morning. So a good session for these quick commerce players. Axis Bank, that stock is also among the gainers. Interglobe continues to do well. Bajaj Auto, ONGC, Ultratech are some of the other names that are dominating the gainers list. But on the downside, you have names like Adani Ports, Power Grid, HCL Tech as well from the IT pack not doing well. Trent, that did see some buying interest, has once again succumbed to selling pressure. That stock is down 1.5%. Bharat Electronics, in fact, all the defense names have taken a U-turn. The Defense Acquisition Council has cleared proposals worth 80,000 crore rupees. We'll talk about that in details, but all these defense stocks have now fallen or dropped into the red. Geo Financial among the laggards, Wipro, Hindalco, Cipla, M&M, these are some of the other laggards. But on that note, let's check if our technical guest is ready to join us. Okay, Rajesh Bhosle, Senior Technical and Derivative Analyst, Angel One, is here with us. Rajesh, lovely chatting with you. Just about two more sessions to go, and of course 2 more minutes to go for today's session to end. Doesn't really look like we are going to get any kind of a year-end Santa rally kind of a thing. For all it's the year-end blues that has gripped the market. 25,950, we're around about that level. For the next two sessions, how would you approach the market? Hardly seems like we could see any kind of direction.
Yeah, hi, hello, afternoon. So yes, you have correctly pointed out that last two sessions, and we are not expecting any major move. In fact, if we see throughout the December month, prices have been trading in a range. On the daily chart, we can see a channel formation where around 25,800 to 25,700 has been acting as a support, whereas on the high side 26,100, 26,200 has been acting as a resistance. So 2 days left, and we are not expecting any major move. Prices are likely to stuck in a range. But having said that, some stock specific momentum is definitely there. Can continue to focus on them.
Okay, continue to be stock specific. Just talk about some of these defense names. They were fairly upbeat last week. Of course, Friday we saw a dip as the Defense Acquisition Council meeting was deferred. But today we had the DAC approving proposals to acquire weapon systems worth 80,000 crore rupees. In fact, all these proposals have been cleared, but none of these stocks looked excited as such. Do you think it was the positioning that the positioning that took place ahead of the meeting that was at play? Do you think that's why we saw some profit taking today? And how would you approach them? The names like BDL, Bharat Electronics, etc.
So if we see last week, definitely prices did bounce back, but they are still below the crucial key averages like 50 and 89 EMA. Today we saw prices retesting those levels, but didn't cross them. So we'll still wait for clear signs of strength in them. If we see BEL, it's struggling around its 50 EMA. So we'll wait for BEL to cross levels of 410. Once that is crossed, we can expect the uptrend to resume. Then we can expect levels of around 442 or 440. Similarly, BDLFEC, it has precisely taken resistance on 89 EMA. So same view, it needs to cross about 1530, 1540. Then we can see some momentum. So all this space, they have recently bounced back, but they are still on a key crucial resistance level. Once those are crossed, we can expect some momentum.
Okay, watch out for those levels that Rajesh mentioned. Once those levels are crossed, we could see renewed momentum in these stocks. But let's take stock of the market close as well. We've ended a shade below that 25,950 mark, 25,942. That's where the Nifty shut shop for the day. Sensex was down somewhere around 350 points or thereabouts. The mid-cap index down 0.5%, underperforming the frontline indices. Advanced decline ratio pretty dismal, 2:5. That was the NSE advanced decline ratio, 900 advances to 2090 declines. So not looking very good. Portfolios, would have seen some bit of pain today. Aside of that, if you look at some of the sectoral movers, metals had a fairly volatile day, and you can attribute it to the sharp swings in global metal prices. Some of these metals like silver have corrected 7%, in today's session, in terms of the commodity prices. And that has, of course, led to a cool off in stock prices as well, especially of Hindustan Zinc and Hindustan Copper. I think Hindustan Zinc was, in fact, down somewhere around 2-3% or so last time I checked. But aside of that, if you look at some of the other sectors, FMCG, as I pointed out earlier, quite a few consumption names were among the top gainers on the Nifty. So FMCG as a pocket managed to end the day in the green. PSU Bank started on the back foot but did well to end the day with slim gains. But real estate, IT, energy, auto, all of these sectors, pharma, all of them ended the day in the red. In fact, realty and IT were among the top laggards. I think for IT, it is the fourth straight day of losses. In terms of, I just want to point out some of the movers from the Nifty 500 universe as well. On the gaining side, you had stocks like MMTC. Again, that stock was up 10%. Some of the graphite names like HEG, Graphite India, they were also up anywhere between 3 to 7%. HFCL, I think this is one stock that moves out of FNO later this week. So that stock was up somewhere around 5.5%. Shipping Corp up 4%. Motherson Sumi Wiring was up almost 4%. Imami also saw spurt of buying. That stock was up almost 4%. Honasa Consumer, again another 3% gains coming in there. But let's see which were the laggards on the Nifty 500 universe. All these railway stocks that have seen good traction this month saw some sharp cuts today. The likes of IRFC, RVNL, all these names were down somewhere around 5% or thereabouts. You also had Dixon, that stock was down 4%. Anant Raj Industries down 3.5%. Angel One down 3.5%. Ircon, of course, the railway theme that was in fact seeing selling across the board. Rights also down 3%. Electra Green Tech was another one that was down somewhere around 3%. What do you make of the moves in some of these, graphite stocks like Graphite India, HEG? Good gains coming in today. Would you look at them at all?
Yeah, definitely. If we see from the longer time frame charts, both HEG and graphite, we are seeing some strong pattern formation. In fact, we see the monthly charts of graphite. We are seeing a strong symmetrical triangle breakout after more than 4 years of consolidation. So we expect outperformance to continue. Possibly graphite can move towards the levels of 70, 720 to 750 if positions are held for like 2 to 3 months. So definitely positive bias on graphite. Similarly, HEG, if we see, on the weekly chart, strong cup and handle price pattern is there. And on the similar line, if it is held for like 2 to 3 months, the stock can extend its move towards the levels of 720 to 750. So both the counters are definitely looking positive. Any dips can be considered as a buying opportunity.
Okay, buy on dips, HEG and Graphite India. But HFCL, that was another stock, gaining on the back of volumes as well. It has snapped out of a 2-day losing streak. Volumes were the highest since August 2024. And I think the stock is down somewhere around 41% so far in 2025. Worst kind of sell-off since 2008. The stock, of course, moves out of F&O later this week, I think from 31st December. The stock has been under severe selling pressure. Today's move, would you just see it as a technical bounce, or would you see some kind of a reversal taking shape, or is it too early to call it that? How are you looking at HFCL?
Also, if we see the chart structure, if we go back in October 2023, prices were trading around the same levels of around 60 to 62 levels. And from there, we had seen a strong rally back towards the levels of 110 to 120 levels. So placed on a very strong support